We have been edging away from things that are maybe as impacted by China. There's some in the technology area like an Apple or a Qualcomm that have a lot of imports from there, but also in the manufacturing area, from the Caterpillars to the Whirlpools of the world have some exposure there, and it'll definitely impact their earnings. So we've lowered our industrial weightings that we have, and we're trying to focus more on things that have most of their sales and production right here in the United States.
You know, it's interesting you say that, Barry. This morning, Whirlpool got an upgrade because the firm said, look, the tariff impact they've mostly passed along to the consumer. They've managed it so far, and now their costs are going down a little bit, and we know anecdotally oil's down too. Is a lot of the bad news priced in?
I think a lot of it is, but it hasn't hit the consumer yet. You don't really see them, reflecting that. Businesses reflect it. It's very apparent to them about the cost, and somebody's going to eat it. And Whirlpool, I mean, estimates are $250, $300 million. Maybe that's not that much to some folks, but still, that's a hit on earnings. So I think it could be. And as consumers see it, if we don't have the job growth that we've had, they could stop buying as much as they were as well.
Sure. And Fred, where do you think the investor should be focused right now? Is it on China, where Strategas has said, look, quietly our China basket has started to outperform, meaning maybe some better signs in terms of a resolution there. But then you have the Mexican tariffs as well. So what do you think should be the most important?
Well, I think there's still an off-ramp for the Mexican tariffs. You've got Peter Navarro outlining for the Mexicans a three-part way they can get out of this. Number one, taking the asylum seekers. It's going to be tough because they're so overwhelmed on the Mexican side of the border to start with, but if they would agree to do that, to increase the patrols on their side of the border, and then to increase the checkpoints on the route that the refugees are taking. That doesn't solve the long-term problem, because the problem is of Central American governments who aren't providing for the basic needs and safety of their citizens,
right,
and Mexicans as well. In terms of China, I think that's a bigger problem. That's going to be solving the Mexican problem is going to be hard, but I think getting out of the tariffs there's still a possibility. On China, I think we're in for a decades-long systemic competition between the two sides. So even if you solve or come to some sort of a trade agreement now, and the Chinese are drawing more and more red lines about what they're not willing to accept, which is change of their law, change of their system, change of their subsidies, I think it's not going to fundamentally change that we're going to be in a battle that investors have to watch for many years to come.
All right.